Hi, everyone. It's AJ with North Capital Mortgage, and today we are covering bonus depreciation. If you are a real estate investor and you are not familiar with what bonus depreciation is, please stick around and watch this video. It's going to give you an excellent overview of how this tax incentive can help you save dollars and put them back into your own pocket, increasing your cash flow. But before we do so, as a disclaimer, please know I am not a tax professional. I'm a mortgage and real estate professional. Please verify all that we discuss on this video with your tax professional. This video is for discussion purposes only, and it is not tax advice, okay? So what is bonus depreciation? So this is a powerful tax incentive tool that allows real estate investors and businesses to deduct a significant portion of the cost of qualifying property in the year it's placed in service. So this helps any item that has a useful life of 20 years or less, okay? And previously bonus depreciation has been around, but they have reinstated it back at the 100% factor. Okay. So let's take a look here. Before we fully understand what this is and how it works, I think we should understand the traditional method of depreciating an asset. So, again, we're talking today about real estate. So, we're going to focus on real property or real estate property. So, when we look at an expense versus an asset, the traditional deduction rules say that if it's a true expense, and an expense is something that you would utilize immediately. For example, um, a pack of paper for your printer, or renewing your license annually, or taking a client out to dinner. Those sorts of things can be expensed as a tax or as a deduction immediately in that particular tax year. However, if you are purchasing an asset for business purposes, such as a car or a piece of real estate, you cannot take that expense 100% in the first year. You have to utilize what's called depreciation. And for real estate, the useful life of depreciation for residential real estate is 27 and a half years. That's what the IRS deems it to be. For a car, I believe it's 5 years. So when we depreciate an asset, a tangible asset over a period of time, we utilize straight line depreciation. So let's take a look at an example here for a piece of real estate. And this is not including bonus depreciation. This is the traditional depreciation example here. So straight line depreciation for real property, 27 and a half years, which the IRS deems its useful life. And we are going to be able to depreciate the real property only, not the land or not any intangibles. Again, it's for qualified business purposes only. So, for as an example, we buy a $500,000 piece of real estate. 350K is deemed the value of the structure itself. 150 is the land. So we're going to take that 350,000 divided by 27 and a half for straight line annual depreciation of $12,727 a year. You will be able to deduct that on your Schedule E as depreciation every year for a tax savings. Okay, that's the traditional way to depreciate real property. Uh, but bonus depreciation is a little bit different. It provides us quite an incentive. So, what bonus depreciation says is all assets with a useful life of 20 years or less may be depreciated in the year the asset is put in service. Okay. But if real estate has a value of 27 and a half years for its useful life, how do we utilize bonus depreciation if bonus depreciation only allows for 20 years or less? Well, we can do so by acquiring a cost segregation report. This is a detailed engineering tax study on our property that classifies parts of the real estate into shorter lived asset categories for the purposes of faster depreciation. So we're going to segment out everything from the property itself. And here's an example, a snapshot of a particular cost segregation report. Um, it says that again, $500,000 purchase, land value 150. The basis for segregation is 350,000. We're going to come here and look at the 15-year useful life would be categorized for things like landscaping, driveways, sidewalks, gutters, fencing, etc. In this case, they estimated that at $60,000 of the 350. For 5 years or less, computer equipment, electrical, wiring, outlets, demountable walls, removable floor coverings, etc. Another 60,000 here for 5 years or less as an estimate, which brings our adjusted basis down to 230,000 for depreciating over 27 and a half years. So we've got 120,000 that we could use towards bonus depreciation. Let's see how that works. So if we have a purchase at 500K, 350K property value, 150K land value, as we mentioned, bonus depreciation at 120K, which means useful life of 20 years or less for the items that we segregated out of that real property. Our standard depreciation is now 230 divided by 27 and a half. So total first year depreciation is $128,363, okay, which is huge. That's going to provide a tremendous benefit. Some of you may be saying, well, if I'm only getting $30,000 of rent that year and we deduct 128,000, what happens to the rest of the roughly 100,000? Well, you can carry it forward, and we're going to talk about that in our pros and cons here. So the pros for utilizing bonus depreciation: huge first year deductions, increased cash flow because you're having a wonderful tax savings, works for new and existing properties when they're put into service. So if you have your own property now and you're going to move to a different location and you're going to keep your departing residence and utilize it as a rental property, you can utilize bonus depreciation for that property. And again, there are no income limits to utilize this strategy. Any additional tax deductions that you have, you can roll forward into future years, so you're not losing those deductions. Some of the cons, you're going to have smaller deductions in later years, and you may have something called depreciation recapture. If you sell your property in some years in the future, all of those tax savings, you may have a tax recapture. So you definitely want to talk to your CPA about that. So, a wonderful overview here about how bonus depreciation works with cost segregation for investment property real estate. Reminder, I am not a tax professional. Please consult with your CPA on all of this. And if you have any questions or want to go over a particular scenario, please reach out. I'm always available. AJ with North Capital Mortgage. Thank you so much.